This week's trades, market movers, and technical levels that count, wrapped up with clarity and precision. This is Weekly Wrap Up with Verified Investing.
Hey, everybody. Welcome to the Weekly Wrap Up. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. What a day in the markets. It started out with heavy selling. The markets were cratering. NASDAQ was down 2%, S&P down over 1%. And then just like that, the click of a button, the snap of fingers, the selling was shut off. Now, this is something I've talked about many times over, how early in the day, the institutions have the volume in the market so that they can be unloading. And so they're actively, aggressively unloading. But by the time a Friday afternoon comes, number one, they want to be on the weekend. They want to get away. They want to be done for the week. And also the volume is too light. So they shut the spigot off. And ultimately, markets tend to float higher. And that's exactly what we've seen today. Take a look at the markets here. This is the S&P on an intraday basis. We opened lower. We kind of had this little wobble and then a heavy sell-off, again, down over 1%. And then look, right here, I mean, you're literally the low of the day was at 12 p.m. Eastern time, basically to the minute. So again, don't think that that's arbitrary. That's not a random occurrence. That's where they had programmed the algorithms to shut off the selling pressure. What happens? Markets end up floating up the remainder of the day. And with just about 3 minutes to go, S&P is now flat on the day. When all is said and done, S&P is flat on the day. Amazing recovery. Let's flip over to our weekly chart. So the weekly candle is still a nice sell candle. We're down about 1.7% on the week for the S&P 500. It's still respecting the bigger parallel going back to the COVID lows through the bear market lows here of 2022 and the liberation sell-off lows. That parallel matches perfectly with the bull market high of 2021. As we can see, so far markets are selling on the back of that. But today, again, a classic day of early selling and a recovery back up as retail is programmed, literally programmed, to buy the dip. All right. And they'll keep being the suckers. All right. Keep buying into the market because that's what's worked, right? We've had the V-shaped recoveries almost nonstop since COVID. Look at every dip. It's been a V-shaped recovery. That is programming retail to always think that there's no risk in buying a 1, 2, 3% dip in the market. We'll see new all-time highs within a week or two. I don't believe that. I'm sending out the caution flag. I think markets are at a major pivot top, but nonetheless, retail has been brainwashed to think that. All right, back to the charts we go. Look at the QQQ today, guys. The NASDAQ 100, this is the chart that we're looking at. Look at this beautiful parallel from these highs here all the way back in this range there to this high here, and then through just about 2 weeks ago's high. And we have this beautiful low, and it matches perfectly with this low. Look at today. We were below this level, and lo and behold, they've rescued the NASDAQ 100 to keep it within this parallel uptrend or upsloping trend zone or parallel channel. All right. So again, this got saved today right here. Absolutely got saved. You know what else got saved? Take a look at NVIDIA. NVIDIA, which was hammering on this trend line, much the same, right? Very similar to what we have seen on the QQQ, was hammering over and over again on a trend line here that goes back to early September. Early in the day, it was below that level, and it has come back to recapture. Now, short term, to me, this signals probably near term, maybe a little bit of a bounce to the upside, but I'm now on high alert, and I'm going to show you why. Let's get rid of these trend lines. I'm more now thinking that we could be setting up for this type of move. What would that form, guys? Do you guys see the pattern formation here? Shoulder, okay, head, and shoulder. And ultimately, if we do get a bounce, let's say for next week, a small bounce on NVIDIA as it retraces the drop that it saw from $5 trillion all the way down here, you could rally up, and then the next rollover comes in, and we could see that head and shoulder formation. For those of you that don't know, that might be new to technical analysis, the head and shoulder pattern is a bearish formation once it breaks the neckline. It has to break the neckline. I'll show you where the neckline would be. To find the neckline, guys, essentially all you do is you connect the armpit to the armpit, as I call it, and that would be your neckline. So if the pattern does form, basically here to here, and then we bounce up and we come back in, it doesn't trigger until it breaks this point here, which is right around 180. Once that happens, you can actually calculate the technical distance that it should fall. What you do is you take the highest point of the head, you do a plumb line straight down to the neckline, and then that distance you take that line wherever it breaks the neckline, that would be your target. If it breaks the way I've drawn it, we'd have a target of $145 on Nvidia. That would be quite the fall from the recent highs of 210 with $5 trillion valuation. All right, couple other things to look at here as we continue through. Broadcom did break a key trend line. We will see if it confirms next week. Broadcom is the other trillion-dollar semiconductor company. So again, we'll monitor that, but you can see this beautiful upsloping trend line here. We were hammering on it over and over again. Today, we finally did get it closed below. So again, this now is on watch for a confirmed breakdown later or early next week. Now, one stock I did buy today, guys, I bought Oracle. All right, I put out the alert in my smart money stocks and ETF service, which is my swing trade alert service. We bought in at 232.50 today because the chart had done a full retrace of the 40% gap up on and move up on earnings. All right. So again, remember, this was when they announced that incredible backlog. It was the greatest backlog ever, 600 billion, whatever it was. The point is, that was all hype. And look at the selling. This, by the way, this isn't really mom and pop selling. This is institutions. But the beautiful thing about being a swing trader is that there's always an opportunity. We filled this gap right in here. Look at that, right to that low. And look at the bounce. We're already up $7 on this swing trade, just picked up today in smart money stocks and ETFs at verifiedinvesting.com. It's a great trade. I'm going to look for a bounce back right into this area here. This will be first target. And then I think it could even go back into this area here. This will be the major resistance level. This is kind of my ideal upside target. I may take a little bit off the table here, but really looking for that move back up. But that, again, is those are my favorite chart setups. You had this crazy move up. Retail was ecstatic about it. And ultimately, it was a sell the news event. And it came down as if the news never came, back to that same level. And it's going to just generally, probability wise, which is what we trade off of in technical analysis, this favors a bounce here. One of the biggest runners, look at this, guys. SanDisk today reported earnings yesterday after the close. Initially, it was up on earnings, then chopped around. This morning, it fell, popped up at the open, then fell again. And then look at the end of day short squeeze. This is a classic Friday afternoon short squeeze. Shorts had piled in thinking this chart was overdone. And the market said, you know what? Let's squeeze these shorts. And they sure did. Look at that move up. Now, this probably comes in next week. But the point is, today was a great example on SanDisk of a short squeeze. Look at this vertical chart as well, folks. Very, very overbought. So I do think it comes back in, but let's be fair. There's always a chance it can hold up in the near term, go higher first. But eventually, I see a 50% haircut within 6 months on this at the longest, frankly. All right, another stock that recovered, Robinhood. Robinhood, one of the favorites of retail. You can see the beautiful parallel, the lows here, the highs marking perfectly. Here we looked like we were going to confirm today, right? So again, look at the break below. We closed below. Today, if we had closed below yesterday's low, it would have been a confirmed breakdown. Instead, what happens? It recovers, closes back inside of this range, essentially getting saved. Now, eventually this does break down, but it shows you how impressive the buy the dippers are in the market right now, right? So essentially you had the early selling institutions dumping. They shut off the valve, like I said, and retail just comes in and buys all the remainder of the day, pushing most of these stocks right back up. Incredible stuff, folks. Really, really is. All right, let's get into some gold action here, folks. If we take a look at gold, gold eked out a small gain today. This still looks very similar to a bear flag. I love showing this chart of the 2025 bull run in gold, and then the same bull run almost identically, right, in 1979. Up move, consolidation, blast off, up move, consolidation, and blast off. I mean, it's mimicking perfectly. And what I think is even more intriguing is, do you guys see how this reversal candle, the week, so these are both weekly charts. So this week was a full reversal in 1980, January of 1980. Look, if you combine both of these candles, it essentially negates the last green candle. This one negated it in one candle. So it took 2 weeks to do that, but it still negated it. Now, what we're seeing is, in my opinion, look at this. Look at right here. The following weeks from the full reversal, we got consolidation, and then the next move came in. So I'm looking again, look at this next move down on gold. So essentially what we're projecting here based on the mimic and the pattern formation, you might get one more week of sideways, and then we should get our next leg lower. Please understand, I am long-term huge bull on gold. In fact, I'll use the pullbacks if we get back to 35, 3,600 as a big buying opportunity. I still have my long-term holdings on gold, but shorter term, the chart still tells me it's going lower. So we'll see if I'm correct on that front. Again, I will keep you guys obviously in the loop. Silver, much the same, right? So silver, the top was a little bit different in that it was more of a parallel channel going back to the 2008 financial crisis low, to the COVID low here, to the bull market high. That gave us perfectly this top recently on silver at $54, $55 per ounce. But then if we go to the daily chart, here you have the down move, inside bar, looks to me to be exactly the same, a bear flag formation. So I still expect more downside on silver as well. Let's quickly touch on oil here. Oil's not doing much, had a small positive day, still looks like a cup and handle pattern, which is a bullish pattern in technical analysis if you are into the technical side of stuff and the names. And then if we look at natural gas here, folks, don't worry, we'll get to Bitcoin in just a second. Natural gas, small pullback today, but the breakout on the weekly chart is still very strong. You can see the trend line down. This is my upside target right in here. All right, lastly, Bitcoin. Let's take a look. Bitcoin, last I checked, was having a solid day, bouncing back up. Stock market rallying back, Bitcoin rallying back here too. I also think early in the day we saw relative strength on Bitcoin, and I part of me thinks that there is a little bit of money flow, that profits were being taken, maybe even institutional, right? So institutions were generally the ones selling early in the day, and it almost looks like some of that money from the institutions ended up in Bitcoin as a protected kind of formation there, or as a protected asset. So just something just to kind of contemplate. I still think Bitcoin's going to probably go lower because panic is going to envelope those smarter buyers that are kind of accumulating. But overall, good bounce on Bitcoin. I still look for maybe as early as next week, a 93 to 94,000 big support level hit on the chart of Bitcoin. All right, guys, it's been a week. Earnings out this week. Obviously, no government still. The government's still shut down. But ultimately, some very interesting price action when we look at the semis, when we look at the S&P. And this sets us up for a pivotal week next week. My prediction, the government actually reopens by at some point next week. It almost makes me think maybe some news leaked out to a few friends and family members today. Not mine, by the way. I have no inside info. I wish I did, but I don't. But again, of a government maybe deal that's getting done here. So I could see that maybe the reversal in the markets could have been a little bit of that news leak out. We'll see again when we come into Monday. You guys go have a great weekend. Thank you so much for being fans of Verified Investing and understanding that we look at charts. We don't look at BS. You guys have a great weekend. Thanks again for tuning in. Take care.